Hello everyone, and thanks for tuning in for another Market Outlook by Exness. My name is Stanislav Bernukhov, Senior Trading Content Specialist here at Exness, and in today's video we are going to be checking on a possible trading idea for the week ahead, the narratives behind it, and which economic data could potentially affect this trade. But before we proceed, let's check on the performance of last week's idea. So the idea was a buy for Nikkei index with a target area around 49,000. The previous week's high. The idea was fully accurate as the price had surpassed the projected level in several days after the publication. For this week, we are monitoring JPM stock. It had bounced off the dynamic support area between 20 and 50-day moving averages and may go even higher as the risk appetite gets back to stocks. What's the narrative behind this idea? The financial sector of the US has been underperforming so far in comparison to the tech sector. The ratio between them has reached the 2 standard deviations, and we may observe the sector rotation soon, as investors can fix their profits for tax and invest more in financial stocks. The price moves down for 14 days in a row, which statistically should break the downward swing and reverse it higher. The S&P 500 volatility index slowly declines, calming down the markets as the US President Donald Trump softens the rhetorics with China. If this process continues, the risk appetite for the stock market will get back. The latest quarterly earnings report for JPM has shown that the net income rose to $14.4 billion and EPS surpassed $5, beating forecasts. Strong trading and investment banking offset moderate loan growth. Jamie Dimon, the CEO of JPM, warned the rising overall credit risk despite the robust overall performance. So the report was mixed, but not negative per se. Which economic data could affect this trade? The main publication being monitored by traders this week is the US inflation report on Friday, 8:30 Eastern Time. The government shutdown is still going on, so the publication will be released only if government agencies will be working again, including the US Bureau of Labor Statistics, which is responsible for publication of the CPI report. So in summary, the idea for this week is a potential long trade for JPM. The overall decrease of volatility and softening rhetorics of Donald Trump might cause the correction for stocks. The financial sector was relatively undervalued, so it may bounce higher more aggressively than anything else. If the government shutdown in the US ends, traders will monitor for the US inflation on Friday. Remember, this is not a signal, it's just the idea for a trade. It's not a guarantee of success. Always do your own research and never forget to manage your risk.